Hello, everyone. We've got Ennie Lim with us. She's the president of HoneyBee, a new certified B corporation that's making short-term loans to employees who have paid time off. This is really an intriguing notion to help people cover those shortfalls, cash shortfalls that they so often experience that sometimes send people into a deep, dark cycle. So stick around. You don't want to miss this episode.
Welcome to the Your Mark on the World show with your champion of social good, Devin D. Thorpe.
This episode is made possible via the support of our sponsors, including Johnson & Johnson's Caring Crowd. Ennie, welcome to the show.
Thanks for having me, Devin.
Ennie, we're really excited to learn more about what you're doing. Why don't you start by just telling us how HoneyBee works?
Absolutely. I can start by, essentially, we work with employers that have employees that have PTO or vacation days, and essentially letting them borrow against pay time off, and so that they have access to emergency funds whenever they need it. However, we do allow them to use their PTO and vacation days, even if they borrow the short-term loan with us. So we do it so that they can have, extra funds whenever they need it. And so we also help them build credit as well. And we don't charge interest. And we just have a small flat fee, just 5%, always capped at $50. And that's pretty simple.
And loans go up to $2,500. Is that right?
That's correct.
So how do employees typically use this money? What's a typical use case?
So use case could be anything from their car broken down, the fridge stopped working and they need to hire someone to fix it, to extra medical expenses that they have in their family, and just from anything from even paying down their current PayDay loan that they're trying to pay off because they've charged such high interest.
One of the in my life experience, I spent some time as a CFO, and so I would sometimes get the requests for advances, payroll advances, especially the bigger ones, would come to my attention. It would seem to me that this solution would make you very popular with employers, as they would have a ready situation that didn't require them to cut a check. What are you seeing, in fact, with employers?
Well, the difference with pay advances is we're that extra buffer that they need. And so our goal is to really remove that burden from their plate. A lot of employers have provided loans in-house, and our goal is to make sure that we are the extra rainy day support for the employees whenever they need it. We make sure there's minimal admin that they have to do. It's really just verifying that the employee works at the company and just letting us know when they get terminated. We provide all the services to the employees and the communication with all our borrowers, and as well as we help them build credit. And that's really key to our program, is making sure they understand that building credit is really important as well.
How much do you charge the company for this program?
We don't charge them anything. So it is no cost for the employers. And the reason being that we're able to do that is because we are a certified benefit corporation, and our goal and mission is to protect employees against predatory lenders and make sure they have a smarter alternative.
What is the standard loan term and terms?
Yes. So just think about it as an extra week's pay for the employee. So it's roughly an extra week's pay depending on how much they make per hour, how much accrued PTO they've earned, as well as how long they've been at the company. So it can vary from $250 to $2,500, and we never let them borrow more than they can afford. And it's always a 3-month term, 5 biweekly repayments.
5 biweekly repayments. So every other week.
That's
right?
correct.
Yeah. So
Schedule.
And no interest, just the 5% fee. And so do they end up paying back, not that it matters a lot, but do they end up paying back 105% of what they borrowed, or do you give them 95% of what they borrow?
So you mean, so the 5% is calculated in their repayments. And of course, we have that grace period that we skip for the first payroll. We always follow the payroll schedule, and they've always paid back in full. We've had no default rate, even though all of our borrowers have been subprime borrowers even. And so.
Interesting. So, what are the concerns you hear from employers that don't sign up?
The concern is always, this is too good to be true. Actually, and that's the honest truth, right? Because we make sure that there's minimal work for the admin, and we're just here as a support system for them. And then that is honestly always the pushback is, this is too good to be true. What's the catch? And it's because we have access to capital at a very low cost, and that's how we're able to do it. We are working with a social impact investment firm that has provided us a $100 million in credit facility to fund the loans, and that's why we're able to do this.
Who's providing that funding?
So we're still working out the details, but essentially that will be announced in a press release soon.
Okay, we look forward to that news. So, Ennie, what happens if someone leaves their employment under any particular circumstance during the 3-month repayment period?
So all we ask from HR is that they notify us when the employee is terminated, and essentially letting us know how much PTO needs to be paid out, and we restructure the loan with the employee. So there is no liability on the employer side, and we take care of that. And our goal is to make sure that the employee is able to repay as they move on to their next job, and just to be there for them.
So do you take the balance of the loan proceeds that are due from their PTO as they leave, or do you let them make payments going forward?
So we do take, yes, that's why the PTO is always the collateral, and we do take the balance of the PTO.
So just you take up to what they owe you from the PTO, right?
Yes, and we will restructure the loan with them.
That's what I'm not understanding.
Mm-hmm.
If you pay it off, you don't need to restructure it. So is it paid off or restructured?
So if it's paid off, then no. But if it's not paid off, then we will restructure the loan with them.
When wouldn't it be paid off?
Well, essentially, this is a rare case that it would happen, but it rarely happens. Most of the time, it's been paid off before they get terminated, because this is such a short-term loan. It's only 3 months. And if they were to get terminated during the period that they have an outstanding loan balance, the amount is usually really minimal, really just between $100 to $150. And it's usually fully paid off by the PTO.
Now, how's it going? What are the big wins that you've notched so far?
I think the big wins is really I'm taking stories from some amazing employees that have come out and shared their stories about how HoneyBee has really helped them. And I focused a lot on a lot of the women that are single moms, and the only caregiver of the house has really come out and expressed how helpful it's been to build credit, and also to have a support system for them to help with their children. And so I think a lot of these amazing stories have come out, a lot of them has been women that's been really candid about it. And so those are huge wins for us, just taking away the stigma of talking about debt and financial setbacks. And so I do it. The reason that HoneyBee started was from my own story with my financial setbacks. So I really appreciate that from all the employees that have been so candid about it. And those are big wins for me.
Now, you mentioned that this idea germinated with your own financial hardships. Tell us a little bit about how the idea formed and what the circumstances were.
Yes, absolutely. When I moved to the US, I was actually credit invisible. So building credit was extremely difficult, and I actually built it off a a rewards program card at TJ Maxx. So I just bought a lot of stuff at TJ Maxx and built it for about 4 years. And then a couple of years ago, I went through a divorce, which actually sets your credit score back, and then, went through some tough financial setbacks there. And I really started looking at alternatives to what happens when a subprime borrower trying to borrow money. And then all the solution out there was PayDay and charging really high interest. And so I started doing a little bit more research about that and asking different industry leaders, HR, and I've discovered that a lot of people, actually 7 out of 10 Americans, don't have $500 in savings for an emergency. And so really just noodling around that, attended a lot of HR events, and that's how we came up with the idea of a PTO-backed loan, right? And so this all came to me because I needed to find a solution, an innovative solution to help people just like myself.
It's, nothing like walking in someone else's shoes, I guess, or in your case, your own shoes. But interesting how you were able to parlay that experience into something so potentially powerful.
I appreciate that.
What is the most important lesson you've learned in your career so far?
The most important lesson that I've really learned is, I think having empathy for people is really important. And for example, just having an employer understand that what you just mentioned, walking in your employee's shoes, that might be, just making ends meet, and how they might be feeling, just providing an alternative for them is sometimes just all they need. So really empathy. And of course, for me in my career is persistence and resilience, right? Building a company that's impact focused is not easy. It's not easy. We have investors, and of course you speak to a lot of investors, and really sticking to your mission is really key. My goal is to help working Americans out of debt, and you just have to stick with that. And of course, there are times where people try to change your business model, make sure you charge more, but that's not my goal. And so sticking to my gun and making sure that we're all value aligned is really important to me. And really prioritizing. Building a startup and a company is not easy, but you really just have to prioritize on what's the most important task to do.
You talk about having empathy. One of my recollections from my days as a CFO was that there didn't seem to be much correlation. There was surprisingly little correlation between income and the people who would end up in an acute need for cash. Are you seeing that as well, that you're just as likely to see someone who's making $80,000 a year, $90,000 a year need cash as someone who's making 30?
Yes, absolutely. So we do have a lot of even higher earners that essentially borrow from us. And the reason being, we all have credit card debt and the cost of living is really high. And so, yes, we do actually come across that.
Yeah. It's surprising how many people across the economic spectrum are living paycheck to paycheck. And if you get in a pinch, you're in a pinch. So this is a really interesting resource for a lot of people. Annie, what is your superpower?
What is my superpower? I would have to say my ability to connect with people. I think that is really something that's brought us this far. It's a new program for a lot of people, for allowing employers to understand what their employees are really going through. Is me going out there and sharing the story, and really my personal story, and why it's important to just for a second, just to feel what an employee might be going through, or somebody that may look like they're doing well, but they could be going through a lot. And so that's, I guess, would be my superpower.
That's great. Well, Annie, we sure appreciate you taking the time to be with us today. Before you go, I wonder if you would take just a minute and tell people how they can learn more about HoneyBee and connect with you personally.
Yes, definitely. Definitely. You can go on our website. It's www.meethoneybee.com. And you can connect with me directly. Just my email is ennie@meethoneybee.com.
Fantastic. Well, Ennie, we thank you very much for being with us today, and we wish you every success in helping people avoid the crazy outcomes of payday lending.
Absolutely. Thank you so much for having me, Devin.
All righty. Let's do some good.
At Caring Crowd, we believe everyone has the power to make a difference. Through our crowdfunding platform for community health, we empower passionate people to drive real change. Whether you work for a nonprofit organization, volunteer, or want to get involved for the first time, you can post a campaign on Caring Crowd. Join us, because caring is where change begins.
Thank you for listening. Devin Thorpe's mission is to end extreme poverty, improve global health, and mitigate climate change before 2045 by finding and sharing the stories of those who are doing the most good. You can join with other listeners to accelerate Devin's mission by visiting helpdevin.org right now.